Hello, this is Mark Vianello, the inventor and developer of the VFC DLOM Calculator. In this segment, I will demonstrate the single probability DLOM calculator using price volatility probability. I'm already logged in, but you will need to register and have an active subscription to make any calculations. First, let's select our calculator. We do this by hovering our mouse over the Calculators tab and then selecting Single Probability DLOM Calculator. Step 1 involves creating or selecting a report profile. I will choose one that I previously created for Gusher Oil Company. Pay attention to the valuation date field. The VFC DLOM calculator uses the valuation date in its price volatility functions. For this example, my valuation date is December 31, 2010. Step 2 involves choosing a probability method. The second radio button allows the user to employ price volatility probability and a fixed time period assumption. Step 3 involves defining the price volatility probabilities. Choosing the first radio button allows users to enter specific price volatility assumptions. Choosing the second radio button allows users to enter the ticker symbols of publicly traded stocks and stock indices to use as guidelines for price volatility assumptions. Selection of appropriate guidelines requires professional judgment. For this example, however, I will enter the ticker symbols of several oil and gas exploration companies, in this instance, BAS, CRED, FPP, KHNI, LEI, PDO, and VOC. Be sure to separate the ticker symbols with commas. The VFC DLOM calculator will obtain the price history of the specified ticker symbols and compute their price volatilities for the 50, 100, 250, and 500 trading days prior to the valuation date, which again in this example is December 31, 2010. Or by selecting the fifth radio button, users can enter a specific date range. To continue our example, I'm going to select the 500 trading day option. Step 4 involves entering a specific number of days representing the expected marketing period of an asset. Alternatively, this field could represent the number of days of a marketing restriction, such as occurs with restricted stocks and Rule 144 dribble out. Running the VFC DLOM calculator for a series of dates allows practitioners to estimate DLOM under customizable dribble out scenarios. A Rule 144 application is planned to automate this process. I will enter 206 days for this example and click the Run Report button. Now we see a screen report for the results of a single probability DLOM that is based on price volatility probability. The report has several features. The left section includes a results summary. It shows the probability-based DLOM in this example is 28.7%. And we learned that the guideline group comprises the following characteristics. The mean price volatility is 51.9%. The standard deviation of price volatility is 61.7%. The median price volatility is 33.4%. The most frequent occurrence of price volatility is 13.8%. And 95% of all price volatility occurs at or below 156.5%. The screen report also has graphs that can be dragged and dropped into your report in their collapsed form, or can be expanded for a closer look. There is a table summarizing the stock or index price volatility results, and another table reporting the selected or specified price volatility measurement period. Note that the VFC DLOM calculator did not find ticker symbol KHNI, so it was not included in the DLOM calculation. This particular situation was caused by my transposition of the H and K in the ticker symbol. By clicking the Run Again report, we can go back to step 3 to correct the error and rerun the report. Now we see that the price data for HKNI is available, and we see that the corrected probability adjusted DLOM is 28.6%. But the price volatility information presented in the table indicates that the stock of CRED is considerably less volatile than the other 5 guideline companies, while LEI is considerably more volatile. We also see that the price data for TVOC was not available for all 500 trading days, but was only available for 444 days. Let's assume that we have investigated these anomalies and concluded that CRED, LEI, TVOC are not as comparable to the subject company as we desire. We can return to step 3 by clicking the Run Again button, and there remove CRED, LEI, and TVOC from our guideline group. And we click Run Report again. We now find that the revised guideline group probability adjusted DLOM is 28.3%. Now let's consider whether the look-back period makes a significant difference to DLOM. We'll do that by again clicking the Run Again button. We will select the 50-day radio button and click Run Report. We now learn that probability adjusted DLOM based on the 50 trading days prior to the valuation date results in a 20.5% probability adjusted DLOM, a fairly substantial decline. This fact tells us that the price volatility of the 4 remaining guideline stocks has declined over the 2 years preceding our 12/31/2010 valuation date. Some event may have occurred that should be considered in deciding the appropriate price volatility look-back period. Again, selection of an appropriate look-back period requires professional judgment. Now let's try something else. We start by again clicking the Run Again button. If your engagement allows use of the Book of Wisdom concept, it might be appropriate to base price volatility on a time period after the valuation date. For this example, I will select the 6-month period from January 1 to June 30, 2011. We start by clicking the 5th radio button and then entering the dates. And then click Run Report. We now find that the probability adjusted DLOM is 25.7%, indicating that the price volatility of the guideline group in the 6 months after the valuation date has increased relative to the 50 trading days before the valuation date. Keep in mind that appropriate application of the Book of Wisdom concept requires professional judgment. The VFC DLOM Calculator also provides a report in PDF format that can be printed or saved to the user's computer. The report includes all of the profile data provided by the user, including the valuation date and the report date. It includes the probability adjusted discount for lack of marketability, a summary of the calculation results, the inputs provided by the user, and the series of diagnostic graphs. The graphs help users understand the probability distribution of their variables, how probability and DLOM accumulate, and how cumulative DLOM compares with raw DLOM. Raw DLOM is the number that results from applying the Longstaff formula without imposing probability on the results. A PDF report also includes the numbers comprising the results and graphs. Returning to the screen report, clicking the Download Tables button provides spreadsheets of these numbers. If you need assistance, Vianello Forensic Consulting, LLC is available for consultation, training, and continuing education seminars regarding the theories and methodologies underlying probability-based DLOM and application of the VFC DLOM Calculator. Feel free to contact me directly and to visit VFC's website at www.vianello.biz. Please also consider visiting our affiliate website, The Judicial View, at www.judicialview.com. The Judicial View is a source for court decision research.